stock market morning prep video for Thursday, May the 8th. Very weird price action is what I can tell you, what's going on in the marketplace. We have different asset classes doing different things, and markets continue to get bid up and buying the dip. It's just been one crazy day after another. Markets look vulnerable. Main leaders are breaking down. Laggards are leading the way up. So it's a pretty crazy stuff. So I really want to just dial into the indexes versus the indicators, because they could be misleading, and I don't want to do that. I just want to focus on the indexes and what are they telling us. Well, they're telling us that the markets in general at the moment, with technical analysis, telling us that we are indeed looking to head lower. Now, things do change, as you know. Analysis change day to day, and we could literally break out to the upside. I don't think that's the case, but they're making it really difficult. And when I mean they, you have a lot of these fund managers and money managers that it's in their best interest to keep the money, keep the indexes up at these levels, as well as the Federal Reserve. We all know that they are the biggest manipulator of our markets, and that's what they're doing. It's just, you could see it intraday. I can't stress it enough. If you're not in front of the computer screens, and if one day you get a chance to look at the markets at the open between 9:30 and 11:30, 12 o'clock, you could just see what they're doing. It's absolutely incredible stuff. I've never seen anything like this in 27 years of me doing this. So we have to be selective. I know it sounds like a broken record, but right now is not the time to put out a lot of positions. There's going to be plenty of opportunity between now and the summer. And I do think that the seasonal weakness will take into play, unless something dramatically happens and shows me on the charts that we're not. But we do have a couple of things I'm going to show you, and some of them may be repetitive, but I want to, again, let you guys know, keep in mind that it looks like we have some real big moves happening. Now, in order for me, what I try to look at is I say, what are the other, safe haven asset classes doing when we have a day that the market reversed? Like yesterday, we actually gapped down and opened lower. So, for instance, and I get a lot of emails, I'm so frustrated, the market, I identified a market opening and broke down below a 15-minute range, which is supposed to do that. And then you wait for the next back test, but the back test doesn't happen. That's the reversal. And now you wait for the next long trade. It's already lunch. It goes sideways, and then we either rally back or we sell off for the last hour or two. So there's really no play unless you're either long or short, which to me, that's a 50-50 trade the way the market's been going the last several weeks. So, it's either one side or the other, and that's not really trading to me. If you're obviously a longer term investor, that's different. But if you're trading intraday, or you're trading for 1 to 2 or 3 days as a swing, have to be careful, because the markets are indeed looking lower. They're trending lower, but yet the markets are not breaking down. That's also a bullish sign. So we have a lot of mixed signals, but most of the signals are pointing to telling us that we are headed lower. So yesterday I was looking at some of the consumer staples, and I was looking around consumer discretionary. So we had, and I looked at consumer staples versus discretionary. The consumer staples outperformed discretionary by 12%. That's a lot. That's really a lot to really pick up. REITs, the Dow Jones REIT Index, up 1.23%. All right, staples in itself was up 1.62%. I'm sorry, utilities were up 1.62%. Staples were up 9.6% as an individual, as a whole. So that's not good. I mean, there's a lot of investors scared of the market that are putting money to work. And what about bonds? Bonds haven't moved. Yes, they sell off a little bit here and there, but generally they're up. So we need to really use caution, because what I'm afraid of is that you wake up one morning and the stocks, S&P's down 20 handles, and that's just the beginning. So that's what's kind of scares me. And I'm not saying that we're looking for a crash at any sort, but I think we're looking at a decent correction for a few weeks, several weeks, to really get this uncertainty out of the markets. That's what we want, right? When we get these uncertainty out of the markets, we can go back to buying dips and being normal, and then saying, okay, no problem, we are back in uptrend. Now, the overall picture looks fantastic, but again, we don't know the way the markets are telling us that things are really acting funky. And when I don't know, again, what I always say, when in doubt, stay out. I don't mean stay out of the market, but I mean, pick the best trade setups. You don't have to trade every single day, but if you are an intraday trader, you definitely need to be in front of screens every day to analyze and look for trade setups for the next day. So anyway, enough of that, but I just want to let you know why I'm still very cautious here in the markets. A perfect example is the dollar index. Dollar now paused yesterday, is now taking that back, and it looks like it may break this 79 long-term support line, which is that neckline of the head and shoulders pattern I showed you a few days back. Now, when that does happen, it should put a major bid in commodities, right? But what's happening here? Look at the gold. Gold sold off yesterday, and it's crazy. We're not doing anything. We're up $3 today, but we take this area out here, this 1279. We have no support until 1180, and that's really what I was looking for. If you remember me, I said I like gold better on a better setup around 1180. That's where I really like to see gold. But if you see, we're below the 200, and I can make the case here that we could go really either way. Sorry about that. Let me just get that. Here we go. We can go either way here, trying to get a trend line here for you guys. See, we have a trend line that we're making lower lows and lower highs. Right here, right? A high, lower low, lower high from this previous high, and same goes on. Now we did break this little trend line, so if we can get above the 200, then I think we could at least challenge the 1380 for a short-term trading goal. But if we break below, we'll have some deeper ramifications, get down to 1180. Now again, dollar's up, gold should be, dollar is getting sold off, gold should be up. Now crude oil is a little different. I like crude oil here. I think crude oil needs a little bit more work to the upside, and then we can look for some plays. But the oil stocks in itself, Apache, you get the Schlumbergers, all of them are a little bit overextended, but some need some attention. That they look fantastic. And when the oil stocks start to move, crude oil starts to go with it. And then when that goes, they just complement each other. So I like the crude oil trade when you get some sort of a pullback. But again, you see what I'm talking about. Now bonds hasn't sold off at all. If anything, it broke out of an inverted head and shoulders, which I've been showing you, and we broke that slanted neckline. So we're actually moving higher, and all we're doing is just creating another bull flag, or if you will, a pennant to move higher. Okay, now I think bonds in the overall picture are still lower, but in the longer term, but in the short term, that will affect equities, because money's rotating out of equities going into bonds, and you can see that clearly here. All right, so again, another word of caution. Japanese yen, inverted head and shoulders, hasn't broke out of the neckline. We also have that ascending triangle, as I mentioned, a lot of overhead resistance of this cluster. But if we take that out, it should put more pressure in equities as well. Now maybe that's what the markets are waiting for. But we need to be patient, and we need to take our cue to price in the marketplace. Now, 1272 extension still holding from back in March. We're just underneath it now. Again, we have a lot of support here, as you can see, and this is one of our laggards, which are leading the markets. It's very odd. Now, I'm going to say you can have that for a day. Look at the diamonds. Diamonds again. Diamonds look fantastic. There's nothing wrong with this at all. It doesn't look like it's a bearish at all in this chart. However, this is a laggard leading the market higher, and the S&P. So we have another issue. Transports. Now this is a leader, and it does look pretty good, and I will tell you that. So if the transports maybe holds up, maybe they're holding up the market as well. So, but there's a lot of other indicators and a lot of different sectors that are telling us that we have to use caution. Here's the IWM. I put this dotted slash line, which is the simple moving average, the 200. Here's the EMA, the exponential moving average at 200. There's usually not that much of a deviation, but in this case there is, because this 200 EMA seems to be really supporting the market since back of April 15th, as you can see. But if you look at it, we're below it. We're below the 200 and the simple moving average, which really is what we follow on the daily charts. But I put this down here because it's kind of acting as support, so it's holding, but it's below it now. So that's bearish, and fund managers will be looking at that to start reducing positions. And when that happens, then you get additional selling. And lastly is the Qs. I've been watching the Qs for a while, and I was watching this head and shoulders pattern. I didn't want to put it out until the right shoulder was really made, and this is pretty significant here, that now I could say that it really is pretty symmetrical with the left. So not only do you have lower lows and lower highs, which I'll show you in the next show, which I have been showing you, you have a nice big head and shoulders pattern with the neckline coming in around 94. Okay, By the time that gets down here, this 200 will probably be above it. So if it breaks that, then I think you're going to see some really good selling coming in. Let me just show you the other chart that I've been watching. So you can see here again, lower lows, lower highs. Ugly chart, and this is the right shoulder, by the way, of what I just showed you. So again, guys, just use a little caution. Let's see what happens. Take it one step at a time. If you're into spreads and options, that's the best way to do it. Selling one to two standard deviations away. If you're not, then you know what? Take the best setups. Now, somebody asked me, "Hey, Mark, I'd really like to buy the market or buy stocks, and even though the markets are lower." Well, that's fine. You can buy relative strength to what the market is doing, as long as there's a good catalyst that's going to support that purchase, for the day. All right, just keep that in mind. All right, guys. Hope it helps, and let's see we get another good movement in the markets. Hopefully, we can start really moving lower, so we can at least alleviate this uncertainty, and then look to start buying stocks again. All right. Have a great day. We'll speak to you more. Take care.